All right, good morning, everybody. Today is Thursday, October 30th, and market opens in about 30 seconds. So the intraday market open entry for today will be for a sell. And also we have the rejection scalps, or I'm sorry, the scalps for market open on my left, impulse on in the middle, and crosses all the way to my right. So let's see how this goes. So we're still looking for a sell here. And let's see here. What we get? Um, all right. Nice. So for this one, this will be a sell and looks like might get stopped out on this one. Now for the scalps, for the scalps, let's see. For the scalp entries, see what we have here. Let me see. So here for the market open scalp, here again, we're going for a 1:3. So this one already hit full TP. For a 1:3, full TP on that one. The crosses entry again. Let me see the crosses. The crosses would still be running. The crosses would have been stopped out. So 1:3 -1, and this one for the market open. Again, for me, I've automated all these strategies, so I'm just marking them up. So -2R and then a 3R win. So that's a +1R gain. And what else? What else? For this impulse entries, I normally take two. So I normally take the 931 and then I'm waiting for the other one. So there's still an account that takes the other one. And today's market open entry, unfortunately, got stopped out. So the intraday one that we normally go for a 1:2. So that one, unfortunately, got stopped out for the day. And this crosses, this crosses one looks like it just got pinged, taken out at stop loss, and then price pushed back up. So this market open scalps, typically you just want a big move in that direction. So for example, this impulse one, the one that went straight to TP. So that's what you normally want. And again, since this is US30 and we've been in and around the all-time high, so we just created a new all-time high yesterday. So in these areas, you normally expect back and forth. And let me see here. It looks like we may get a there's an SAR entry here, but I wouldn't take the sell here because we do have bullish order blocks, so I wouldn't be looking to take any sell entries around this 30-minute SAR that has been established. All right, so for today, so the only other scalp I'm waiting on is this middle chart that's right here. So uh, whatever signal fires next here, it will be taken automatically in my accounts that copy that. So I have a total of 6 main accounts. So one account of each of these three charts. And then actually the middle chart has like two accounts. So that's four. And then the fifth account is the 10-point entry that we normally take with the SAR and EMA scalps. And then the other one is the structure-based entry. So this would have been a good entry for a sell. However, I wouldn't take the sell here because we are in a bullish order block. But this one you can see with this 30-minute SAR, it did satisfy the 10-point rejection. But unfortunately, so for example, the entry would have been here at 50, and then the 1:1 entry would have been here at 617. But it's in and around an order block or a bullish order block, and I don't want to trade against that. So here, whatever signal fires next in this middle chart, that's what I will take. It might be for a sell, but we'll see what it will be for. All right. So for this for this crosses entries, again, I only take the first one after 9:30. So there is another buy entry that has formed, but I'm not taking that. So for the crosses entry, I take the first one after 9:30. So the first one was this buy right here that unfortunately got tagged out. But it still does show that we are in a bullish momentum. So depending on what you visualize from this charts, and again, this is on the 15-second time frame. So depending on what you visualize, you can take them as they come up. But for me, it's like for all these accounts, I only take one trade a day. So most of these accounts, it's literally just one trade a day. And the one in the middle is the only exception because I take the first trade either at 9:30. Sometimes there's no 9:30 impulse entry, and sometimes there is. So the only exception is the middle one that I take on two separate accounts. So there's an account that waits for the 9:31. If there's no 9:31, no trade for that day. And then if there's no 9:31, there's normally another signal that comes up before 11. So that's what I'm waiting for on the other account. And then for this particular one, for the crosses, there's something, there's an additional setup, and we do have some SARs up here that will probably trade. So we have the hourly, this hourly SARs here, 80. All right, so I'll be looking to take a sell at this hourly SAR, the hourly, this top one, 9202.302.7. So I'll be looking to take a sell up here. But for these crosses, entries, let me see, there's an impulse about to come up here. Looks like it might be for a sell. Let's see. So this has already been entered in my account that takes this. Let me see. I think the entry. We still have a strong bullish push here. But anyway, so all these entries for me are automated. So whatever happens with that one happens. But for these crosses here, this account or this chart all the way to my right, there is a way to enter. Yeah, and this one for me got taken out. There is a way to enter this entries here. So for example, and I'll just mark this up, and I don't want to miss this entry up here, but we are still in a big bullish push here. So the only sell I'll be taking, and this one will be manually. So at this point, what I do, I go ahead and close my automated accounts. So for this crosses one here, after each signal, there is this cream or teal line. So for example, how this one operates is that once a buy signal fires, and for this particular one, you wouldn't be going with heavy, you wouldn't be going with heavy lot sizes. But after each signal fires, there is also an exit signal. So in this instance, it's this teal triangle here. So for example, for this particular buy that fired down here, it hasn't shown a reversal or a closing signal, because what you'd expect is after either a buy or sell, you ride the position until you get the closing signal. So for example, for this one, wait, there's another SAR that has been formed. Just a second. 87. So the manual entry for this cell would be here at 87. So I'm looking to take a cell here. So, but this one would be a manual entry, 76.3, 77, 87. So let's see if we'll get here first before I go over the other item. All right, perfect. So as usual, the two trade entries I normally take, the 10 point entry, which would be this. And of course, that's for 1:2. And then the other one is the 1:1 entry. So this is the one we enter for the official trades. This whole week, all three, I think we've only taken three of them and all three have lost. So we'll see whether today's is any different. Actually, only two, because yesterday, oh yeah, yesterday was minus 0.75. Yeah, so this week we've taken three and all three have been losers. Minus 0.75. So let's see if today's will be any different. So this is just the 10-point one. The first one where you wait for price to go 10 points past your SAR or EMA. And then after that, that's when you wait for, 10 points past your SAR or EMA. And then after that, that's when you wait for, 10 points past your SAR or EMA. And then after that, that's when you wait for, 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after that, that's when you wait for 10 points past your SAR or EMA. And then after the crossover. So you wait. So when that red X closes, so there it is right there. So I mean that trade right there, just manually. Again, still in a heavily bullish environment, but we'll see how that goes. Yeah. So what I was saying for this particular one, for the crossover, this particular trade would still be riding up from this area. So it'd still be riding up about 200 points, which is a lot for US30. So this is another possible way to ride these trades, but that's only for the crosses entry because that's the only entry I have exit signals. And for today as well, this one as well has been taken out. So had a bit of ranging, came back into profit. Um, but this one, unfortunately, for today as well, another minus 0.75. And that's to be expected for times when you have anything that's in and around the all-time high. So US30, so the all-time high is around here. So price is pushing up again towards the all-time high. So for today, let's see. So for today, the intraday market open entry ended up losing. The market open scalp ended up losing. The market open impulse entry ended up winning for a 1:3. So scalp wise or scalps wise, uh, I'm at break even because I had what? I had one loss, one loss here and one loss here. So three net losses. But then the first impulse entry was win for a 1:3. So 1:3 win and minus 3R. So that's at break even. And then the intraday market open entry ended up losing. Yesterday's, personally for me, ended up winning because I got a better entry here. But assuming anybody got in exactly at market open, we had a big push to the downside, and then price went and almost hit TP. But then during FOMC, I also forgot that yesterday was FOMC, but ended up losing. But if you're counting the net wins and losses for the intraday market open. So minus 2R, minus 3R over the last, actually minus 4R over the last four trading days. The day before that was 2R win. Day before that was minus 1R win. And then since October 22nd, the previous 8 days were all winners for 2R. So, and that's again why I've started focusing more on trades or setups that give multiple R's as opposed to one R. Because, for example, for this intraday market open, the one that we go for 100 points TP and 100 points stop loss and 200 points TP, you can see 22nd October was a win. The day before that was a win. The day before that, a win. Day before that as well, a win. Day before that, a win. Day before that, again, a win. I think it had an day before that, again, a win. It had an 8 day winning streak. So 8 days of winning streaks, that's 8 times 2, that's 16R. And the losses have been like let's see, the losses have, since the winning streak, the losses have been minus 1R, minus 1R, that's 2R, minus 3R, minus 4R, minus 5R. So minus 5R loss versus 16R win. So that's a net win of 11R. So if you're risking, but for this market open intraday, and again, for this one, it's only one trade a day. So you just take whatever direction is trending, and then you just call it a day, whether it's a win or a loss, you go for a 1:2. Um, but for this ones, for the intraday market open, I do recommend going for risking 0.5% per trade because upon backtesting, because again, this one I backtested since the beginning of last year. If you risk 1% per trade, I think you'd have blown your account only twice because at some point there was an 8 day losing about a 8 day losing streak on a certain month, and then in the open of the next month there was like a 2 or 3 day losing streak. So if you're risking 1% per trade on a prop firm account, you'd have ended up losing. But if you risked 0.5% per trade, you'd have survived that losing streak and eventually came back. But yeah, over the course of like a year and a half, there was only one the major losing streak was like a 10-day losing streak. So if you're risking 0.5% per trade, you'd have only lost like 5% of your account value. And then the losing streak would have ended and you'd have had some winning streaks, etc. But again, the intraday market open entry again is one trade a day. The scalps, same thing. This market open. So the market open scalp is same as the intraday uh, trade. The only difference is that for the scalp, you are going for a 20-point stop loss and 60-point TP. So again, for that one, you're going for a one is to what? You're going for a 1:3 risk to reward and looking, kind of visualizing this on my trading journal. You'll see that if we look at the market open scalps, so this I don't have the intraday market open entry. I only take it on one account and it's on Trade Locker, but I'll get a specific account for it to journal. But for looking at the intraday, I'm sorry, looking at the market open rejection scalps, the one that we go for 1:3, you can see that here last week, I took a trade on Thursday. I didn't take a trade for this one on Friday because my account didn't copy. But you can see last week, 1600 loss. Yesterday, I didn't take a trade on the market open because it was FOMC. I really don't like trading FOMC during the morning session. But you can see Monday, market open hit a 1:3 for 6K profit. And for these ones, I take 1%. I risk 1% per trade. But I think starting next month, I may risk 0.5% per trade. There's another I'm sorry, SAR entry that can be here. So for this particular one, 985, so 995.6. So if price does get here during the live session, that's another entry I can take. But you can see, so today will be minus 2K, but you can see out of the win rate for this one is about 66.67. So if we do today's loss for the market open, it will come to a win rate of 50% with 2 wins and 2 losses. But remember, each trade you're risking 1:3. So whenever you win a trade, you're making 3R. So you can see so far for the month, I'm at 10K. So minus 2K for today, it's about 8K in profit. And then the other scalps is the crosses scalp. So the crosses scalp, again, I'm up about 5K. For today, the crosses scalp lost. So this win rate will drop a little bit, but overall I'm up 5,600. So minus 2K for today, that will be about 3,600. But you can see this week, again, one trade a day. So for this week, Monday, the first crosses entry ended up hitting stop loss. Tuesday, the same thing. Wednesday, the same thing. Today, again, the same thing. So have like about a four day losing streak. But the crosses, even when back testing, the crosses is one of the most profitable ones, especially when it starts hitting. And then the other one is the impulse entry. So the impulse entry, there's, as I said, two types of entries. There is the 9:30 a.m. only entry. So for like today, the 9:30 a.m. only entry, I've had a losing streak since Friday of last week. So there are days when you won't get the 9:30 a.m. But for today, when I update my journal for the impulse entry, today won like a 1:3. So for today on my journal here will be a 6K win. So overall for this one, currently, I'm minus 300, and I think this is for the fees, but plus 6,000. So this will bring me up about 5,700 for the impulse entry for the 9:30 a.m. Only. entry. And then the other entry is the post 9:30 a.m. So the account that doesn't take the 9:30 a.m. signal and waits for the next signal after 9:30 a.m. So far on that account, up about 3,800. But for today, the post 9:30 entry was this sell that unfortunately ended up being stocked out. So for today, this one will bring it down by 2,000. So this will be about 1,800 profit net return. So eventually, I'll probably even I'll start limiting my live trading because I've automated most of my strategies. So the only strategy that I'm left manually trading is this SAR and EMA scalps. So for example, the ones that lost today, and I've lost pretty much this week. So these are the only ones that I haven't been able to manually, I'm sorry, to automate. But yeah, going forward, I may start limiting my live trades or my live trading sessions because most of my trades now are fully automated. But we'll see how that goes. Yeah, but I think we are following this buy entry here. So let's assume, and I'll also automate this one at some point. So let's assume when I was talking about, so this is the only strategy that has exit signals. So for this one, I think what I will do is I'll automate it and only have an account that takes the all the entries that happen during the morning session. And then the goal for this one is to ride price until you get the exit signal. So the exit signal for this buy that's down here, the one that fired down here, the exit signal is this one. So if you can see this yellow or teal colors here, that would be the exit signal. So this particular one would have ridden price up until here. So would have ridden price for 250 points. The only thing for this particular one, since you would be taking multiple trades a day, is to maybe not take like heavy lot sizes. So maybe take a lot size, I don't know. So maybe take a lot size where, because most of them, even when the trade comes against you and comes against the entry level, I think it goes down mostly maybe 20 points or something. Um, so maybe I'm trying to think. So maybe risking, let me see. With my current lot sizes, um, 25. So maybe 500, 25, 250. Yeah, I'll have to do some math on this one, but I think I'll do that. And for example, another example for this one, if you would have entered the buy for this particular one, the exit signal was here. The exit signal was the close of this candle, so it would have exited. Let me try and mark that up. So this one would have exited here at the close of that red candle. So would have taken a small loss there. Same thing as this one. So this one I think would have taken, I think that's where the exit candle was. Same thing as this other one. But the goal for this one would be you expect to bank a big move and then you expect to take some small hits here and there. So for example, even this one that opened during market open, for this buy right here, the exit candle was this one. So this one, 595 vis-a-vis 535. You would have ridden price for like 60 or so points. But we'll see. I'll try to get that one automated on its own account as well. But yeah, I want to get to a point where in the morning I just turn on all my systems and then they just do the work for me. I may even stop even manually trading this SARs at some point. But for today, so let's see. So it's 10 a.m. I really don't see anything else for today. And even news-wise, let's see. Thursday, let's see if there's anything for tomorrow. So there's nothing for tomorrow. So yeah, so going forward, I think I'll be cutting my my live sessions for the first 30 minutes of market open. And then I think what we'll do is pick one of these strategies, mostly the crosses or this impulse strategy to be the new one that we kind of take to record our progress because I really want to start focusing more on this automation. But yeah, so other than that, that should be it for the day. We are near the all-time high. We are pretty much 200 points, so 215 points away from the all-time high. So price can still get up there. But anytime price gets the all-time high, you just have a lot of manipulation and a lot of consolidation. And one thing that all my strategies hate is consolidation in the market or back and forth. So I wouldn't be looking to do anything much based off of what we have. But other than that, I will see you guys tomorrow. Have a good rest of your Thursday. All right, guys.